there's certain things it's going to set up for, right? We were talking off air about, okay, the opportunity to buy cryptocurrency into this sell-off. Yes, because it is the technology of the future.
In this interview, Raoul Pal talked about the rising inflation and how it's affected the crypto market recently. He compared the crypto market with the housing market and made his final predictions about Bitcoin and cryptos. Overall, he sounded pretty worried in this interview, so we need to pay close attention to what he's saying. Also, I just want to remind you that we're giving away $100 to a random subscriber at the end of this month. To take part in it, all you have to do is subscribe to our channel, turn on post notifications, like this video, and leave a comment in the comments section below. Good luck. Now, let's look at his interview.
What choice do you give people? Do you say, well, you're going to get destroyed because of the supply chain issues, because of COVID and all of this, and your wages won't keep up, so we're going to destroy household net worth, and everything's levered. So all the borrowings against houses and all the borrowings against equities and all of the borrowings on top of borrowings, and you're going to let the collateral go down and blow the entire thing up. So what you're trying to do here, what they're trying to do is reduce the debt via financial repression, which is you basically have inflation running slightly higher, so you have than interest rates. So what you want is to reduce the real value of the debt. So if you think back to your parents, how much they paid for a house and the mortgage they had, the mortgage seems laughable. It's because over time, inflation raised the value of the house and the debt doesn't get raised. So in the end, the debt is nothing. So
the way that is this stuff here make the money less valuable.
Correct.
Oh.
It makes the debt less valuable.
Right.
So it's okay if you're in debt, but if you're borrowing, if you're lending money, it becomes complicated. But anyway, the point being is you either have a fiscal stimulus, which is, let's say, the Republican view. We'll have a fiscal stimulus, cut taxes, and we'll put some spending. And what happens is that doesn't go to the people who are the worst off. Right. So it's creating this issue of 1% versus 99, which everybody can see and nobody knows how to solve. The issue is actually the balance sheet, because all of the expensive assets keep going up because they keep printing money.
The rich get richer.
The rich get richer.
Yeah.
But doing this blanket fiscal stimulus is hard because the rich get richer again. So I think people have thought, well, maybe we should just try and give it directly to the people who are most affected. Okay, fine. Those are the two choices, or you do nothing, which is too late because there's too much debt. So you can't let the system clear anymore. The old way would have been you let the system clear, it's all okay, you just have a recession, everyone stops borrowing as much money, blah, 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 blah. The world is 400% of GDP in debt. The world has never been this in debt in all economic history.
Raoul, I hate to say this, I'm seeing your point of view.
Yeah, and what I'm saying is, regardless of your philosophy, it's difficult to find other outcomes that kind of make some sense. So let's go back to the 1940s now and figure out how bad it was then. This was the very similar setup, the worst supply chain issues, massive inflation, everybody coming back in. Well, what happened was the economy collapsed. Then interest rates came down and they stabilized. And they stabilized because the Fed stabilized them. Oh, and inflation was running slightly hot, 3%, and bond yields are about 2%. So real rates, meaning you in the property market, are going to make a lot of money. So negative real rates become very good for assets. And what happened in the 1940s and 50s was a massive economic boom. What we actually got was the value of the war debt eroding because of this financial repression. We had the value of assets like housing. The equity market went up 900% over that period of time. There was a lot of fiscal stimulus because you had to rebuild after the war, and companies were building factories. So if you think of now, companies are going to be rebuilding factories in the United States or in Europe and not in China. So that's going to add some stimulus. Yes, the jobs are not there. It's robots in the factories, but it's still stimulus for the economy. The government will do some stimulus, as we've talked about. Interest rates will remain relatively low. Inflation will remain controllable, but a little bit higher than it has been. And what that sets off is a period of stability and boom, because there's so much technology. There's a lot of big things happening in the world that could be. So that would be my rosy outcome, would be that. And I think that is still my highest probability, that we kind of muddle through this in a way that we don't expect, because it feels like the end of the world. Imagine what it must have felt like in 1948. All you can see is the end of the world. And then you get this massive inflation. You just think this is the worst thing that could possibly happen. What actually came out of it was something very different. It was the rise of technology. It was the rise of the US as a big superpower. It was a rise of the rebuilding of Europe, the rise of Japan. It was an incredible period. I think I always say the bond market is the truth. The bond market, the job of bond market participants is two things only. What is the future rate of inflation and what's economic growth? Now in the stock market, it's like earnings and this and emotion and all of that. The bond market is simply two things. So they usually get it right. And the easiest way to look at it for most people is TLT. TLT is the bond ETF. If that starts rallying, which it's been doing strongly, before it was going down when the stock market was going down because everyone was fearing inflation. It's just switched. So bonds are now going up when the stock market goes down, which tells you the bond market's going, okay, enough's enough, guys. You've gone too far.
Is that why Harry Dent is yelling and screaming to buy treasuries?
Yeah, and I am too. It's the best trade in the world.
That's
interesting.
interesting.
The best trade in the world at this phase, the next 2 to 3 months. At the end of this phase, I think the Fed come with their cannons again. Whether it happens quickly or in 3 or 6 months' time, it's coming, and the markets will start to the Pavlovian response of the cavalry's coming. And then I think it's very positive for things like cryptocurrency, probably gold, and a few other things. Real estate, I think, is going to take a while, but I don't think it's probably a big event. It got very frothy. It probably corrects somewhat. But again, I don't think the Fed or anybody else wants to see the property market go down because everyone's got the learnings from 2008. So yes, it softens a bit, etc. I think it's okay, and you'll probably get some bargains.
Well, it depends on the type of, because Kim and I are massive real estate investors because we use debt. And I look at retail, and then I look at office buildings, and I'm going, oh my God. But warehouses do good. You know what I mean? And
exactly.
Apartment houses do good.
And this is a structural shift in the global economy. We're never going back to, that chicken run of 1,000 people in an office floor. I mean, I used to work at a trading floor. The guy next to you earns $20 million a year, and he sits 3 feet from you with no privacy in this like battery hen formation of people stuffed in for the maximum productivity. That's gone. I mean, at Real Vision, we got offices in New York, offices in the Cayman Islands, offices all over the place. Nobody goes to the bloody office. We've downsized it once and still nobody goes. It's like 3 people out of 60 go to the office every day. So it's done. Nobody's doing that again. If we're right here and you got cash and we're going to see this big whoosh, and it probably means that the economy and asset prices, there's certain things it's going to set up for, right? We were talking off air about, the opportunity to buy cryptocurrency into this sell-off. Yes, because it is the technology of the future. It also protects against this debasement. We will see, let's say, technology equities, things like genetic sciences and AI and all of this stuff that's coming. It's coming faster than we can ever imagine. Most of this stuff is down 80%. I mean, hell yes. This is what we're looking for. If you want to generate wealth, this is the time to step up.
Yeah, this is the best time.
And you might have the ability to own both commodity stocks because the supply issues are still around for a while. Commodity stocks and technology at the same time, which a lot of people think is weird. It's like you need to be one or the other, and they have this warfare over it. I think both will work quite well as a barbell strategy.